Tesla stock is down more than 2% in the after-hour session. Just got the numbers. Phil, give us the highlights.
Well, it's a bad number if you're looking for the top and bottom line for Tesla in the first quarter. A loss of $2.90. That compares with the estimate from analysts of a loss of 69 cents a share. So way worse than expected there. And in terms of revenue, far light of what they were expected to come in with. They had revenue of $4.54 billion. Revenue was expected to be $5.19 billion. So again, on the top and the bottom line, they are way shy of what was expected. A couple of important notes, Melissa. Cash and cash equivalents, they end the first quarter with $2.2 billion in cash on hand. So they've got enough for the near term. Whether or not that means a capital raise in the future, certainly that'll be coming up in the conference call in about 15 minutes. They are also reaffirming their guidance for between 360 and 400,000 Model 3 or total deliveries, I should say, for all of 2019. And finally, the Shanghai plant that they are currently building, that is scheduled to be up and running sometime early in the fourth quarter, according to Tesla. Again, a big miss on the top and the bottom line. Conference call starting at 5:30. Melissa, back to you.
14 minutes time, Phil, and I'm sure you got to the end. The last two paragraphs of the shareholder letter. 2019 CapEx, the vast majority of which will be to grow capacity, develop new vehicles. $2 to $2.5 billion. They believe the amount sufficient to continue developing the main products. Operating cash flow less CapEx should be positive in every quarter, including the second quarter. That is what they had said before, or is this different because they're saying X,
that is.
X CapEx? Oh, it is. Okay. So
that is, as I understand it, it is.
Okay.
Go ahead.
All right, Phil. We're going to go to Gene. Phil, thanks. We'll check back with you. Gene Munster, we got the numbers. There was a massive delay. They've got a massive miss on both the top and the bottom lines. Now what?
Well, I think you and Phil were getting to kind of the substance of this about where cash is at, and I'm still not quite clear what the guidance is for the June quarter in terms of revenue and what that implies for deliveries. So I understand that the stock's down a little bit here. I would expect that still there's going to be a lot of movement in the stock aftermarket as they really kind of flesh out what their expectations, in particular, how China and Europe are uptaking and that offset the negative of the wearing off of the tax credit. This is good to know, Melissa, but still we don't have the key data, the key facts yet in terms of how to really think about the state of the business right now.
So in terms of when that conference call kicks off in about 12 minutes time, Gene, do you expect the company to give EPS and revenue guidance as well for the second quarter? Yeah,
I think that they will give a little bit more in terms of what the potential loss could be. You outlined some of that, but I think that they will flush that out. But those details and to think about our S&X up or down quarter to quarter and just production rates, all of that will allow us to triangulate what better the June quarter, what their view of the June quarter is going to look like. And so that's the reason why we just don't have all the information right now.
They say at the end of the letter, Gene, we expect to return to profitability in the third quarter and significantly reduce our loss in the second quarter. And I know that's very fuzzy, but what's your take on? So yeah, my take on that
is I would say that was generally what we'd expected, is for more of a loss in the June quarter. I would point out, so in some ways, yes, there was a guide down. It sounds like they're probably guiding down a little bit for earnings for the June quarter, but generally that was expected by investors. I think there was something else that's important when Phil talked about the 360 to 400,000 vehicles, that expectation. They had said that same thing 3 weeks ago. But for them to hit that number for total deliveries in 2019, I think is going to be difficult. And specifically, it implies about 100,000 vehicles per quarter, and they just did 63,000 in the March quarter. Now, because it's difficult, and I define the near term as the next year, doesn't mean that this company isn't going to make it. I think they will be wildly successful. But I do think that there is still risk to some of the street estimates on deliveries. They will be likely below that 340 to 400,000 range.
All right, Gene, we'll let you go back to work here while we trade this stock. Very volatile trade in shares of Tesla in the after-hour session. We've been watching it bounce from a loss of more than 2% to a gain of more than 1% here.
Yeah, BK alluded to this last night. I mean, we've talked about it for a long time now. Kudos to Tim, who's been short this sucker for a while. But 249 was the low back in October. We obviously, I guess, attempted to trade down there in the last 20 minutes or so, and I'm not suggesting anything that's happening now is viable. But with that said, if tomorrow this thing doesn't get hammered again for the first time in a while, you might see a potential for a double bottom. I mean, this is a quarter, by the way. Back in the old days, this is something called you should pre-announce a month and a half before. This was a disaster. And I don't know how you can take seriously any forecast they give going forward, I mean, in my opinion. But with that said, if the stock doesn't sell off on this, that's a very interesting price action.
Okay, I might just add, this is not a double bottom. This is the 5th time we've now tested 250, right? So I don't know many stocks that make
quintuple
bottom, right?
Quinty bottom.
I don't know many stocks that see a low 5 times and hold it. And I think what we want to watch here is watch the response from the bonds. The bonds haven't bought this story at all. I think they trade 86, 87 cents on the dollar. They're near new lows. So if there's a problem here, I think the bond holders are going to tell you that.
Did you cover going into the quarter?
No.
Short?
No. I mean, look, and to me, the most important numbers I just heard were the $2.2 billion in cash on the balance sheet, because I wherever they could have found that cash, they did, and they reported. I'm sure it's all fine, but that's the most important number, I think, for people that are worried about a company that's been cutting capex. You got 10% fewer deliveries. You've got a dynamic where there's some concern about suppliers. You've had this public spat with Panasonic, who they have commitments to essentially to fund battery production. So. Cash on hand, very important. Guy talked about 360 to 400. He's skeptical. I don't even know how you can get there, especially with the fewer delivery numbers. But no one's ever bothered to really care about the delivery numbers. So this to me, it'll be interesting to hear them talk about the directors. There's been a lot of news this week. There's been an avalanche of news, and I think we wait.
The chairwoman brought up this interesting point here. What if Tesla moved away from delivery numbers?
Like Twitter recently did.
Like Apple,
like
Apple in terms of the units. And they said we'll continue reporting total revenues, but why focus on these?
It's an interesting concept when everybody wanted transparency and then they got transparency, and now these guys are all moving away from that, right? I mean, it's a pretty interesting concept. I'm not sure that the market's going to like hearing that, and I don't think they want to see that. They want to see what's going on with Tesla, because to Tim's point, what you're alluding to at least is, boy, these numbers are kind of coming out of wherever. And the idea of listening to numbers that are so far off, Mel, from what they actually can deliver oftentimes.
Well, does that make it, when you see a loss that's wider by $2 a share for the quarter, do you think I can't invest in this company?
It makes it tougher. I think, we look at everything and we all try to decipher as much as we can, but it sure makes it more difficult, especially given what Guy was saying. This should have been probably out there already.